Hello and welcome back to Bitcoin Dorks, your daily source for all things crypto. In today's video, we'll be discussing two new Russian crypto laws that are set to roll out in June and what you need to know about them. The first law is called the Digital Financial Assets or DFA law, which provides a legal framework for cryptocurrencies, tokens, and other digital assets. Under this law, cryptocurrency transactions will be legalized and regulated, making it easier for investors and businesses to operate in the crypto space. The DFA law was enacted in Russia on January 1, 2021, after several years of discussions and debates within the Russian government. The law is seen as a significant milestone in the development of the Russian crypto industry, as it provides a clear legal framework for the use of cryptocurrencies and other digital assets. The Digital Financial Assets (DFA) law is a comprehensive regulation that covers cryptocurrencies, tokens, and other digital assets. It provides a legal framework for the issuance, circulation, and trading of digital assets, as well as the obligations of participants in the crypto industry. Under the DFA law, cryptocurrencies are defined as property, and their use for payment purposes is prohibited. However, individuals and businesses are allowed to buy, sell, and exchange cryptocurrencies for other assets, including fiat currency. Additionally, the law sets out requirements for cryptocurrency exchanges and other crypto-related businesses, such as registration with the government and compliance with anti-money laundering and counterterrorism financing laws. The DFA law also requires cryptocurrency exchanges to obtain licenses from the Russian government and follow strict anti-money laundering, AML and Know Your Customer, KYC, protocols. This is a positive step towards legitimizing the crypto industry and preventing illicit activities. This is a significant step towards legitimizing the crypto industry in Russia, as it provides a clear legal framework for the operation of cryptocurrency businesses. It also helps to prevent illicit activities such as money laundering and terrorist financing, which have been major concerns in the crypto industry for many years. The passing of the DFA law has been seen as a positive step towards greater regulatory clarity and legal certainty for the Russian crypto industry. Prior to the law's enactment, the legal status of cryptocurrencies in Russia was somewhat unclear, leading to uncertainty and hesitancy among investors and businesses. With the passage of the law, it is expected that more investors and businesses will enter the Russian crypto market, leading to increased adoption and growth. However, there are some concerns about the DFA law, particularly regarding its definition of digital assets. The law defines digital assets as records in electronic form created using cryptographic means, which some critics argue is too broad and could potentially include non-financial data. The second law is called the On Digital Currency or ODC law. The ODC law is a significant development in the regulatory landscape for cryptocurrencies in Russia. While the law does not ban the ownership or trading of cryptocurrencies, it does prohibit their use as a means of payment. This means that individuals and businesses in Russia cannot legally use cryptocurrencies to buy or sell goods and services. The law also prohibits the issuance and circulation of cryptocurrencies, with the exception of digital financial assets issued by the Russian central bank. The rationale behind the ODC law is to combat money laundering, terrorist financing, and other illegal activities that could be facilitated by the use of cryptocurrencies. By prohibiting their use as a means of payment, the government hopes to limit the potential for these activities to occur. However, critics of the law argue that it could have a chilling effect on the adoption of cryptocurrencies in Russia. The ODC law is not the only piece of legislation in Russia that regulates cryptocurrencies. In 2019, Russia passed a law on digital rights, which provided a legal framework for blockchain technology and cryptocurrencies. The law defined cryptocurrencies as property and established rules for their taxation and transfer. Some members of the crypto community have criticized the ODC law, arguing that it is a step backward for the industry and could hinder innovation in the crypto space. They argue that cryptocurrencies have the potential to be a more efficient and secure means of payment than traditional currencies, and that prohibiting their use as a payment method could hinder their adoption and growth. Moreover, others believe that the ODC law could actually help legitimize cryptocurrencies by making it clear that they are not a substitute for traditional currencies. They argue that cryptocurrencies should be used as a store of value rather than a means of payment, and that this is a more sustainable way to ensure their long-term success. So, what does all of this mean for the future of cryptocurrencies in Russia? While the DFA law is a positive step towards legitimizing the crypto industry, the ODC law could hinder its growth and adoption. It remains to be seen how these laws will be enforced and whether they will have a significant impact on the crypto industry in Russia. Furthermore, the two Russian crypto laws are a mixed bag for the crypto industry. While the DFA law is a positive step towards legitimizing the industry and preventing illicit activities, the ODC law could hinder the adoption and growth of cryptocurrencies in Russia. It remains to be seen how these laws will be enforced and how they will impact the crypto industry in Russia and around the world. In conclusion, it's important for crypto investors and businesses to stay informed about crypto regulations in different countries, as they can have a significant impact on the value and adoption of cryptocurrencies. Regulations are a necessary part of any industry, but it's important for them to strike the right balance between promoting innovation and preventing illicit activities. That's all for today's video. Thanks for tuning in to Bitcoin Dorks, and don't forget to subscribe for more daily crypto news.